Start off with the fact that we've been seeing incredible numbers coming through from a lot of companies in yesterday's session. So it is all about results at this stage, but the market's not responding to the positive numbers though. Why do you think we're seeing so much pressure coming through for the Nigerian markets?
Morning. I think generally what we're seeing is some price correction. I think because due to the liquidity in the system and also falling interest rates, there's a lot of funds that have been diverted from the fixed income markets into the equities markets. And we were getting into almost bubble territory where we were seeing price earning ratios rise by up in their 20s. And I think what we're seeing now is some price correction. And I think, generally speaking, possibly results weren't necessarily supporting the sort of valuations we saw in the first 3.5 months of the year.
Well, as I mentioned earlier, the gain so far for the local bourse, a gain of 26% in 2010. We saw a gain of around 35% not too long ago. You're talking about a bubble territory emerging. Do you think we could see further losses coming to the fore?
I think we're against where the market is correcting itself, and I presume there will be some sort of downward pressure and increased selling by some profit takers in the markets as well that would further add to the downward pressure. But I think there will be some stabilization soon.
Looking at Total, because it came out with some numbers yesterday, 168% growth in pre-tax profits. Your view on this number? No surprise there, given that the oil price has rallied quite significantly over the last while.
I think what's well, surprising is that we're seeing increased margins from Total. I think across the sector, in terms of the downstream sector, we're looking at margins of about 2% actually, and Total reported a PBT margin of 7% yesterday, and that's what's driving their profitability.
So margins looking better there as well, but turnover declining 2.1%. Obviously, this is going to change quite rapidly as we see the economic recovery taking hold, not only Nigeria, but globally as well.
Possibly, yes, I agree.
Okay, looking at Nestle, also out with results, revenue growth of 25%. The market's not really responding very positively to these numbers.
Nestle is not a very liquid stock, so despite reporting sort of 25% growth in revenue and also almost double that in PBT, market response was negligent because the price didn't move at all. And I think that's as a result of the sort of liquidity of the Nestle stock in the market and the volumes being traded in Nestle.
Well, with such great numbers, would you...
Volumes are around...
So I
was going to say volumes are around about less than 50,000 units.
Do you think it's reason enough to buy into the likes of Nestle? I mean, you mentioned it's not a very liquid stock, but with earnings such as these, I mean, clearly the company is doing something right.
Yeah, it's a stable stock. We'll probably call it a defensive stock in terms of its volatility. It's probably one of the least volatile stocks on the NSE. I think the yield on its recent dividend announcement is about 4%, which is quite decent considering the stock has actually rallied since it made that dividend announcement.
Looking at the banking sector, we've seen some big losses coming through in terms of their share prices over the last few days. Zenith down significantly. We saw some interesting numbers out yesterday, profit climbing 3.5%, but reporting an 8% drop in net interest income. We had United Bank out with some numbers, and they're also planning to try and shore up their balance sheets, so going to the market and raising some capital there. Skybank as well, quite disappointing, 48% loss in net income. Out of those three, though, Abimbola, which companies would you be looking at right now? I mean, the banking sector has been quite interesting in Nigeria over the last few months.
It has, actually. For example, if you look at UBA, they reported declines in their profitability, and that's largely as a result of their cost-to-income ratio, which has increased quite sharply from about 59% to about 83%, if I'm not mistaken. And I think what they've said is that's as a result of their Pan-African expansion and the operating costs in their subsidiaries that's being absorbed on the balance sheet as they write off pre-operational expenses.
Well, Abimbola, thank you very much for your time
today. So in terms
today.
of the ones to watch, I think if you look at Zenith as well.
Continue. Sorry to interrupt you there.
Okay, sorry. Yeah, sorry. If you look at Zenith, Zenith, we're seeing quite flat or marginal growth. We're seeing their revenues growing by about 4%, and PBT is at about 5% or thereabouts. So we're not really seeing the sort of growth we've seen in that sector. And so in terms of the ones to watch, I'll probably be looking more at the Tier 2 banks, which have yet to release results, the likes of Access and FCMB and Diamond Bank.